Please stop making the same mistake over and over again. If your stop is hit, you accept it. No emotion, no hesitation, no debate. You just move on. Letting losers run. I've done it myself several times in my career as a trader. Letting a loser run is the act of refusing to accept reality. Instead of accepting you're wrong and cutting the losing trade, you freeze. You let the trade run until you realize you're down 80% to 90% of your capital. So why do we do this? It has nothing to do with the market, but it has to do with your ego. You are treating a trading loss as a personal insult. You want to be right more than you want to be profitable. You refuse to admit that your analysis was wrong. So you hold on, demanding that the market eventually go on your side the way you wanted to be. The market does not care about your ego. When you hold a losing position, you are no longer operating as a trader. Instead, you become what we called a gambler. This is where most traders blow up their account with just one trade. As a trader, hope is your worst enemy. It ruins your emotions. It clouds your judgment. You become paralyzed, unable to look at the markets objectively, because now you're trading with emotions. Jesse Livermore, one of the most brilliant market minds in history. He made fortunes and lost them repeatedly because even he, with all his experience, would sometimes fall into the trap of holding a losing position instead of taking the small cut. Human psychology forces amateurs to do the exact opposite of what is required to make money. When a trade goes slightly into profit, you panic and end up taking small profit instead of waiting for your target TP to hit. You know why? Because you are terrified of losing the small gain. But when a trade goes into the losing trade, you suddenly become the most patient person on earth. My advice is, you must cut your losers with cold, emotionless precision, and you must let your winners run until you hit your profit target. Stick to your plan. In trading, it's normal to lose. Learn to take a small loss, protect your capital. That's the only way you can survive to trade another day. Overtrading. Overtrading is the ultimate manifestation of impatience and greed. If you miss the trade, don't take it. If you're having a profitable day and you hit all your target for the day, learn to walk away. Instead of giving it back to the market, don't get greedy. Don't take random trade that is not according to your strategy. Sometimes we get addicted to trading, and that leads us to treating it as a casino. And also, if you are here to make money, you must learn to embrace the absolute boredom of waiting for your specific setup. Overtrading violently degrades your win rate and your risk to reward ratio. When you force trades that are not part of your targeting plan, you are taking low probability setups. Overtrading also leads directly to the most dangerous phase of a trader's downward spiral, which is revenge trading. You take a perfectly valid loss on a good setup, which is just a standard cost of doing business. But because you are already overstimulated from taking 10 random trades, you get mad at the market and you immediately size up and re-enter without a plan, desperate to get your money back. But you must understand that the market does not owe you anything, and it certainly does not care about your frustration. Market does not care about your emotions. Emotional overtrading can easily wipe your entire month of disciplined, profitable gains. Jesse Livermore, he explicitly stated that his biggest, most consistent profits were made not from his active thinking or constant trading, but from his sitting. He meant sitting on his hands. The real money is made by waiting hours, days, or even weeks for the absolute highest probability turning points in the market, trading only when you get your high probability setup, and then sitting patiently to let the market do its thing. A profitable trader will wait for the exact target that meets every single parameter of their trading plan. To fix this habit, you need to implement strict, unnegotiable boundaries. You must set a maximum number of trades allowed per day. Learn to walk away from your desk. This forces your brain to become highly selective. If you know you are only allowed 2 to 3 trades for the entire day, you are not going to waste them on a low quality setup. You also need to establish a daily max loss. If you hit your max limit for the day, then move on the next day. A profitable trader knows that a successful day means executing their plan flawlessly, even if they didn't take a single trade. If you sit at your screens for many hours and recognize that the market conditions did not align with according to your plan, or you don't see any setup, then walk away. The market will be here tomorrow, next week, and 10 years from now. There's absolutely no shortage of opportunities in the market. From this moment forward, you will stop hunting for trades, and you will let the trades come to you. If you cannot master the simple act of doing nothing when there's nothing to do, you will never find consistency in this game. Master the art of waiting. Protect your capital. Respect your trading plan. Following others' tips or analysis. I'm not saying you can't follow some traders out there, but you cannot borrow someone else's conviction. When you buy an asset simply because someone else said it was a good idea, you still have to do your analysis on your own for you to learn. The person who gave you the tip isn't there to hold your hand. They might have already sold. They might have a completely different risk tolerance than you. Because the trade wasn't your idea, you have absolutely no exit strategy. You don't know what price will you get out. Instead, you hold on, blinded by greed, assuming the market will go up forever because the guru who gave you the tip said it will fly high. The most toxic side effect of following tips, however, is what it does to your long-term development as a trader. When you lose money because you follow someone else's analysis, what do you naturally do? You blame the person who gave it to you. You tell yourself, that guy is an idiot. He scammed me. By outsourcing your trade ideas, you outsource your accountability. If you never take responsibility for your losses, you will never analyze your mistakes. If you never analyze your mistakes, you will never correct your behavior or build your own edge in the market. My advice is turn off the noise, do your own research, formulate your own analysis, because that's the only way you grow as a trader. It's okay to follow others' conviction of the market, but you still have to do the work on your own. It's okay to follow others' conviction of the market, but you still have to do the work on your own. Discipline. You can have the best strategy in the world. You can have infinite capital, but without discipline, you are guaranteed to fail. Discipline is not a part of trading. Discipline is trading. People think discipline is just about waking up early and eating a healthy breakfast before the market opens. That is motivation. True trading discipline is the ability to sit on your hands and do absolutely nothing when you don't see your setup that is according to your trading plan. You only execute when your high probability setup showed up and then executing without hesitation. Doesn't matter if you lost or win as long as you follow your trading plan. You can spend years studying strategy, backtesting it. You can memorize every single variation of an order block. But if you lack the discipline to wait for the price to actually reach that zone, all your knowledge is completely worthless. The market did not pay you for knowing things. It pays you for executing flawlessly. A lack of discipline always starts small. It is never a massive blowout on day one. It begins with tiny, almost imperceptible compromises. You move your stop loss down just 2 pips to give the trade a little more room to breathe. You take a setup that meets 3 out of your 4 criteria because it looks good enough. The market might even reward you for breaking those rules once or twice. That is the worst thing that can happen. You get a positive result from a negative behavior, and your brain wires itself to believe that the rules are optional. You begin to believe you are smarter than the market. Jesse Livermore didn't lose his fortunes because he suddenly forgot how to read the market. He lost his fortunes because there were periods where he simply lost his discipline. He abandoned his own proven rules and followed his emotions. If it can happen to Livermore, it can absolutely happen to you. The undisciplined mind is a master of rationalization. When you are holding a losing trade that has broken structure, your brain will desperately search for any reason to stay in. You will switch from the lower to higher time frame chart to find a new support level. You are lying to yourself, and the market knows it. You must understand that discipline is largely the ability to endure extreme psychological discomfort. It is painful to take a loss. It is painful to watch a setup run to your target without you because you missed the entry by 1 pip. It is mind-numbingly boring to sit at a screen for 3 hours and not click a button. If you can be disciplined like this, then you're no longer part of that 90% of traders who come and go and lose. Always stay disciplined. The market is not your enemy. The only obstacle standing between you and consistent profitability is your own lack of self-control. Harden your mind, write down your rules, and never ever violate them again.